Hello and welcome to Market Today. I'm Siddharth Zarabi and we continue our rolling coverage on the show today. It's a Wednesday where there is some sense of reduction in the panic and the shock that we saw on terrible Tuesday. What a day that was, and clearly right now we can see that the markets seem to be in recovery mode. And joining us to make sense of what's happening now and in the near future, Deepak Shenoy, CEO of Capital Mind. Welcome to the show. Deepak, the markets were focused on the political stock exchange of Delhi, but the focus is now back on Dalal Street, on the Bombay Stock Exchange and the National Stock Exchange. What's your reading of the market as we speak?
So, firstly, thanks, Siddharth, for having me on the show. The problem, I think, markets are like, I keep calling them babies with sugar. So they will overreact and underreact and get hyperactive and underactive at different times. But you have to look at them as babies with sugar, because eventually, as time goes, they will find out what their priorities really are. And over time, we will probably see some stability. What's happened, I think, is that the markets expected kind of a majority to say and all that stuff. But what's happened is not significantly different from what was expected in terms of maybe not a clean majority, but you have at least an idea of who's going to be the next government, and we have some clarity on that. Once this clarity falls in place, we haven't actually got the final note on it, but once it finally falls in place, then a few questions get answered. Are you going to continue to invest in railways and defense and infrastructure and semiconductors? The answer seems to be yes, even today. There is also a significant chance that the allies that they're talking about, both parties, that they're their biggest allies, are actually progressive in nature in terms of economic standpoints. So I don't think they will come in and say, oh, no, stop everything that you guys are doing. Don't do railways, don't do infrastructure. Let's go and focus on something else instead. I don't think that's the case. So that way, I'm not particularly dissatisfied with like the economic threats that an election poses in general. But it, of course, needs more clarity. I think where we are today is still in limbo, but less limbo than we were perhaps at the same time yesterday, which, is how markets.
And that switch over in 24 hours quite visible. I was looking at it since the morning. The PSU bank index was in the red. And viewers, you can just see that it's just turned positive. So in some ways that was the last bastion, and it was amongst the first to fall yesterday. Deepak, you've tweeted just a little while ago, and I want to take that forward before I toss it to my colleague Sakshi Batra, who's also with us now. You said once we have clarity on policy continuity, it's growth that will drive valuations. Now, taking your earlier answer about what preferences are likely, and given that the two major partners are themselves progressive and will perhaps extract their pound of flesh in terms of fiscal package, expenditure package for their states, and not interfere with the broader markets. What is your sense about corporate earnings? Because we saw the recent quarter, and within sectors, the PSU bank index, one of the best quarters ever. So what's your sense about corporate earnings going forward from here as part of the broader economy?
So I think two parts to this. First is subsidies to the individual states, say Bihar or Andhra Pradesh, affect things majorly. My answer is probably no. Andhra is one of the most relatively most entrepreneurial states in India in terms of, and it has been for a while, even when people were talking about Gujarat as a model, Andhra was actually under Chandrababu Naidu doing much better in terms of GDP, economic growth.
And the original IT man.
He built roads when people didn't know that they were supposed to be building roads in the 90s. And I think, really speaking, if there is actually a subsidy given to the state, it may be for Amravati, which is a new city and was stalled by the intermediate chief ministers. That will actually benefit the economy in general, whether it is construction, real estate, infrastructure, and so on. But Bihar also similarly, I think Bihar needs to develop. It has some of the lowest per capita GDP states, among the lowest in the country, and it does need to develop. So I don't think development of these states is going to be a challenge from corporate earnings threat kind of point of view. But looking at the past, we've seen about between 14 and 23% on median earnings, depending on what you look at in the Nifty 500. I don't think this is meaningfully bad from an earnings perspective, but more importantly, it is much higher than it used to be in the past. People talk about small caps going up a lot, but guess what? Their PE ratio, price to earnings ratio, is roughly the same as it was 3 years or 5 years ago. Now, 2019 to now, we are talking of earnings growth being equal to the price growth, and the price has gone up 3x or 3.5 times since then. So we're really looking at earnings having magnificently increased over the last 4 or 5 years. And I believe some of this is also because of policies that have focused on Indian manufacturing, Indian companies, PLI, and so on. These things will, if they continue, if there is policy continuity, then you're going to see this growth continue. There's an inflection point in some sectors where their growth is going to be 5x, 10x, not a 30, 20% kind of number. And that 5x, 10x is already starting to show in a few sectors. If that policy continuity happens, then I think that stuff stays on track, including companies in railways and defense and areas of say, semiconductors and so on.
Right. Deepak, good morning. I want to understand from you one key thing that, as a money manager and as a guide to all the investors community at large, how would you advise fresh money be deployed in Modi 3.0, which is now coming back with a different caveat, different set of coalition this time around, and how is it going to be different from Modi 2.0?
Sakshi, I wish I knew the answer to whether there is going to even be a Modi 3.0. I don't know the answer to that. I will wait till it actually happens. So we are into this don't predict, respond kind of an architecture. So we wait till things happen before we can say they will. But by and large, if you stick to your guns, unless there is something that is violative of the core strategy that you have, for instance, the government stops giving PLI, that changes a lot of strategy and a lot of business goals for a number of companies. But if they were to continue to say, let's do what we are doing, let's continue this on this road, I think these companies will have a huge growth path from here for the next 4 or 5 years. Now, whether it is a Modi 3.0 or NDA 3.0 or something else 3.0, my core focus here is, are they just going to continue the policy or not? Now, remember that Aadhaar was started by another government, but proliferated by another government. And when this new government came, they said, oh no, Aadhaar is dead. And then Aadhaar was alive, and it is now bigger in our lives than it was before. So it isn't even that a government change will destroy economies. It isn't even subsidies will. For instance, 5 years ago to now, we've had the biggest subsidy program in India ever. 80 crore people getting free food, 200 plus thousand crores a year. A process greater than the fertilizer subsidy and the fuel subsidy added up in some of the biggest years. And yet, we've had a stock market that has done wonders, the companies that have grown their earnings magnificently. So it is impossible to predict the impact of something when you know it is happening to when after it actually happens, how the impact is going to be. I would say over here, corporate earnings are at threat only if there is a policy change, a discontinuity. But if there is not, then corporate earnings in India actually, I think, should grow very strongly because of our domestic economy.
Okay. Right. Deepak, apart from this, could you also tell us, has yesterday's dip given you any risk rewards in any of the pockets which are favorable? And would you now look at several of the other pockets that have perhaps remained outside of the market rally now to be taking front row, apart from the Modi premium stocks like the PSU stocks, the defense, the railways, where we have seen a huge run up happening? Where is the risk reward really shifting to in the markets?
So I think at one level yesterday, the defense and railway stocks also corrected substantially higher. A PSU financier of the power sector, like a PFC or an REC, fell at 20-25% in the interim. So I think there are opportunities there as well, because it's not like their growth is stalled or is over. but there are opportunities in that space. We own a significant amount of LIC as a fund manager, and therefore I continue to see that as a huge opportunity because I think it was undervalued even when it was at its peak, say on Monday, but it continues to be even more undervalued now. So I don't believe that the PSU pack is entirely overvalued as a whole versus, I mean, in the individual pockets of attention that I think it deserves. But also, if you look at PSU banks, pharma, they have stayed out of the rally for a while. I think they will continue to do well. Some of the domestic manufacturing companies, which are kind of cooled off since January, I think they continue to be attractive 18, 20 times earnings, sometimes 15 times earnings when they're growing at 25 to 30%. Some of them are small and mid cap, so that's where they're growing. I'm not very fond of FMCG, to be fair. I think FMCG's growth yesterday was just a knee-jerk reaction to the drama that was happening.
That continues. That continues. It's the top gainer today. Why would you say that you're not such a fan?
Because people are not going to use more toothpaste. So yes, we own Colgate in our momentum portfolio, which is more driven by the prices than the fundamentals. But how much more toothpaste do you expect to use? India is not going to get so, I mean, like to a point where toothpaste sales are up 25%, at best 10%, maybe 8%, out of which 6 or 7% will come from a price rise and about 2 or 3% from population growth, right? So you don't get meaningful growth in many of these FMCG quality companies. They don't deserve to trade at 70 times earnings or 80 times earnings. Hindustan Unilever went up a lot yesterday. And again, I don't look at that as saying, what is it in their product portfolio that you think will grow? Any one of them will grow at more than 5 times.
Wasn't that, or isn't it still a defensive sort of adjustment to events from yesterday?
That's what I said. It's the drama. But once the earnings, eventually the growth starts to play a role, right? So at a point where everything is fine and dandy, you're kind of investing in these companies. But eventually markets show you that earnings growth matters. If you look at Asian Paints over 4 years, even Hindustan Unilever, over a longer period of time, it's had its period of fun. But there was a period in 10 years in which it did nothing at all. I know because we own the stock for 10 years as in my family. You can see that a lot of times there will be these patches of growth, especially in FMCG sectors. In some, there is actual real growth. So Dabur and Marico did have real growth for a while in the past. But again, they've also slowed. I don't think FMCG as a pack makes a lot of sense unless there's a new player, a new brand that comes and changes the market. Today, it's becoming easier and easier to build brands because the way you get to brands is no longer by mass media. It is by social media. So and the social media ability to make your product more attractive to people who are watching is to make these really viral videos or whatever it is. It's a new muscle that the old companies haven't got. So somebody new in that space will make a difference. So why would I pay such a premium for the currently existing set of companies? I think it's better off. You find a company that's growing 30%, then you pay for it because 30% means in roughly 10 years, you're more than 10x in size. So the price that you pay might actually reflect.
When we talk about, say, India continuing to be a consumption-driven economy, where exactly would you take that bet if not these large cap FMCG majors? If you have to bet on consumption, which are the best place then?
Yeah, so the FMCG bet is not really consumption. It's what's called staples. So what you want as a consuming economy is something called discretionary.
Discretionary.
So you want to move from staples to discretionary. Staples is like rice. Rice will grow. Anybody who's making rice will grow, but rice only grows to a certain size, right? Because everybody buys rice. You grow 7%, 8% a year. That's maximum that you'll grow. But basmati rice, that is premium, that is discretionary because you'll buy it if you're rich enough to buy it. And then there are different grades of basmati for which you'll pay more for certain and less for certain. So there is a lot more growth in that. So I'm just giving you an example. It's not like rice is an investable thing for me. But I think the idea here is the premiumization of what you use is really what domestic consumption is about. So the fact that the Maruti 800 or the Alto is not the best-selling car or has not been the best-selling car for many quarters sometimes has been because India has moved on to SUVs. Tata Nexon was for at least 3 quarters. So there is this premiumization concept which is really big according to me in India. And that premiumization is whether it's in coffee shops or it's in the consumption of gold as jewelry, the consumption of food as higher end restaurants, and even among the clothing spectrum, there are a wide set of opportunities. So you take each of these pockets, and the premiumization actually pays off because it creates a lot more, the ability for a lot more brands to exist at the larger end. The threat to Maggie is, say, a threat to Nestle is the competitor to Maggie. But go today to a superstore and you're not finding only Maggie on the shelves. At least 6 brands of noodles exist. And tomorrow you'll find 100.
Absolutely. Deepak, I'm reminded of a famous viral thread that you had written after Hindenburg hit Adani. And yesterday, the Adani pack got hit again. Today, Sakshi, we can see that Adani Ports has been up in a trade today. The rest of the pack as well, we can bring it up on the screen. But what's your view on the Adani pack? Because which got massacred, and this broader point that you and other market masters have been mentioning, that fundamentals of business, earnings, all of that haven't really been impacted yet by the drama in the political stock exchange.
Which is true for most of the companies, but Adani is this special case like Sun TV is, right? Because you always have a situation.
Yes.
The politics is greater than the economics at some level. And that special situation plays out in a different way. So when they didn't have any earnings, they were valued very richly because of the future potential, perhaps based on their political connections. But effectively, if that is cut off or slowed down, you might see that people may not value those companies quite as richly as they did. Adani Green, Adani Ports, Adani Ports at least has a solid business which generates a lot of reasonable amounts of cash. But many of the others are early in their business evolution stage. So they may find it difficult if they don't get, say, the kind of support they've got in the past. So therefore, those valuations may come down. So in the sense of, I gave you 100 times earnings, now I'm going to give you only 30. So you automatically get a 40 to 50% fall in stock prices, which is normal. I mean, the stock markets are supposed to be like this. They reward and they have both risk and reward. And the downside is when your expectations will simply change to the downside. So I'm not saying they're bad companies. I'm just saying their expectations are very, very high of these companies based on their stock prices, and that expectation could change dramatically lower when. If it appears that any of these companies have a threat from a political perspective. And I'd say the same thing for Sun TV, though I think that is on the rise versus Adani is more under a shock kind of an impact right now.
Okay. Deepak, apart from FMCG, the other two defensive pack, IT and Pharma, which have been rather laggards, how do you see them panning out now?
The pharma is exciting, Sakshi. I think there's a lot of interesting moves that are happening now. The one threat over there is an increased action from FDA, which generally gets into action mostly sometimes politically, sometimes because they have an economic need to restrict inflows from India. But there is a layer of arbitrariness in that approach which you cannot quantify. So therefore, I cannot tell you that tomorrow's FDI action, company A will pass or fail. There is enough arbitrary action and arbitrariness in those actions and politically / geopolitical kind of issues that cause damage to come in. So that being the risk, I think pharma still has a phenomenal way ahead from where it is today. But you may have to play it in phases. There's large cap, mid cap, small cap. There's different areas. APIs versus formulations versus something else. So there is that. IT, I think, is going to take a little more time. They're still readjusting backwards to the impact of AI coming in, the impact of the relative slowdown in among the top US companies. Only 7 are actually making any difference even in their own stock market. So their economy is slowing. So I think we're going to take till the end of this year, until after US elections, before that starts to turn around economically. But the price action may give you opportunities even earlier than that.
Okay. One broader question from the foreign flows point of view is something that I wanted you to address, Deepak, and that is after yesterday's development, a foreign investor who has the options to also invest in other countries, some where recovery is just starting to happen. How will that foreign investor really look at the India story now after yesterday's development?
So we are, I think at this point, not so much the biggest growing in the next year. We're not going to be. There may be Turkey, which is growing faster. Argentina, phenomenal growth potential because they're coming out of literally an abyss. I mean, not literally, but an abyss in the sense of an economic sense. But I would say those countries will remain frontier investments. When you say frontier, you mean you're taking more risk for the reward. Even a Mexico, which actually had elections recently, and there was talk about social increases in the government spending and all that stuff, saw a 6% fall in the peso and 6% fall in their markets yesterday. They might find it, they might be attractive if the fears of this socialization does not materialize in meaningful ways, and it usually does not. But India's advantage is its size. So apart from China, we are the largest economy to target for any foreign brand or product as well. But if India is getting more into the consumption game and premiumization game, and as you've seen, the rupee has depreciated very little in the last 1 year. In fact, even yesterday was less than 0.5%, which was the biggest fall in a single day fall in a year or so. So we have a remarkably stable economy and large one of that size where you can deploy reasonable amounts of capital today versus earlier. So if you're going to move fund flows away from China, India is going to be a partial beneficiary of that, regardless of what other countries are growing. So I think the view longer term is this. Plus, think about the bond indexes adding Indian government bonds to them.
Yes.
Which should happen sometime this year, which will probably bring in more inflows.
Absolutely, and that will also be a pivotal moment. One final question, Deepak, and what would you tell investors about their return expectations? Do they need to reset them? And also, because there are multiple kinds of participants in the market, to those who might want to ask you about momentum investing, will you dissuade them or will you say this is still the time?
So, two things over here. Firstly, return expectations, unfortunately, have been unwisely changed for the higher since COVID. So people think 20% or 25% is a given. My answer to them is usually this: India will grow at 6% GDP growth in the longer term, 6% inflation, probably 7 and 5, some combination of that. So your expectation from the markets is 12%, not more than that. You should not expect more. If somebody gives you more, it's a bonus. So you got 70% last year or 40% last year, it's a bonus. It's 3 years bunched into one. But it does not mean that that's the end, because you can't predict whether the next year is also going to be 40% or it's going to be negative 10%. So you should keep only 12% as your long-term thought process in mind. Every percentage point that you do more than 12% is a ridiculous increase. So you should think of 14 or 15% as outlandish, and 25% as the money is falling from the skies kind of an environment, which does not happen so often. So I think resetting expectations has always been important. I've been on about that for a while, saying 12%. We even have a paper on why 12%. So 12% is an interesting number from both this point of view and also from the long-term Nifty growth point of view. So no matter what has happened over so many years, we look at from the beginning, it's 12%. And that 12% is this similar combination that has happened. Earlier, it used to be relatively higher inflation for a small period, but that hurts you in economic growth maybe 4 years or 5 years down the line. Today, we have lower inflation, higher growth. But from a momentum point of view, momentum is a long strategy. You've got if you don't understand when you can get in and get out, most people don't. In fact, the fear in most people thinks is the market's going to fall. But if you ask people yesterday, would they invest money when the market has fallen? They would say, no, we'll wait. And then when the market recovers today, they will be like, oh, okay, shall we wait for another fall? the fear will always be there of something. You can say US elections, it's coming in November, we'll wait till then. Next year, something else will happen, and so on. So this, if you're not a good timer of markets, a strategy works in the long term. Whether it works bunched in 1 year, our momentum strategy has given something like 70% in the last 1 year or 65%. So you shouldn't expect that going forward. But in the long term, if you can get a little more than your expectations of the index itself, that is how your long-term thought process should work. So I would say if you if you understand this philosophy that you're going to get returns once in a while, and you can't time that once in a while, whether it is now or yesterday or day before yesterday, you should invest in it for the longer term. And if not, just buy the indexes or buy your favorite mutual fund, because this is not for people who look at their portfolios on a daily basis and get worried.
Absolutely, Deepak, and those are important words here. Thank you very much for your time with us today. We will slip into a short break, but coming up on the other side, more market masters are lined up all through the day today, and very shortly, Mihir Vora, Chief Investment Officer of Trust Mutual Fund. Do stay tuned in.
Faith they've shown 3 times in a row. This is now the 4th blessing, and of course I will do my best to be worthy of that trust and to serve them well. I might add that while the World T20 is going on in the US and the West Indies, the Super Over was here. It was a very tight race, and let me congratulate my 2 rivals, Rajiv Chandrasekhar and Paniyan Ravindran, for having put up such a spirited fight that it became